Hello, everyone. Good day, good turnaround Tuesday. The big event of the week is going to be the Fed tomorrow. Also an inflation number tomorrow. And then we contend with the NFP on Friday. I'm here with Mike, TradeGATEHub.com, powered by TradeView Markets. Open a demo and see if I'm right that you could trade everything.
You should be
And
trading everything because, as I've been saying all week, you know what I mean? If you were on a sailboat and wanted to learn how to sail with guaranteed that you would not get either injured or get whatever, have any type of catastrophe, then would you like to sail in a storm to learn? I would. You know what I mean?
Yeah, I think that that's a problem for a lot of people now is that it was a pretty, except for the COVID interruption, pretty smooth ride to the upside. And, I'm hearing a lot of people, calling their friends and relatives, asking what they should do in the market, especially with last week's close on Friday looking pretty ugly, Mike. But the elephant in the room, of course, is the Fed. And, we tagged 3% here on the 10-year. Well, one thing I'd like to point out, and, for a while, what the Fed does, and more importantly, what it says, you could probably throw your charts out for a while, right?
We would say we were saying that before earnings season, right?
Yeah.
And now we're coming up with still major companies. AMD's reporting tonight on top of the Fed. So that statement, if somehow you got by, previously with that statement's more tantamount than ever, meaning the next 24 hours.
In fact, people have a hard time doing nothing.
I do.
And, patience, it pays. Okay, I'll keep it that simple. And, it's really a lot of binary events are not really trading if you're trying to guess the move of the event right after it happens. The trading comes in after the event and you have your areas lined up. You may want to be selling rallies, buying dips, or going with the news. So, but you can't predict it.
No,
and go ahead, Mike.
If I may say so, and it's relevant to your point before I forget, everything's flashing and blinking, is that there is, trading's a lot of anecdotes, a lot of analogies, a lot of cliches. And I've heard this across, I never really dissected it, but I think it's relevant here. It's sometimes what makes you great, what makes you not good. And for me, my career resonated in being an active day trader. No problem saying it. Here I sit, I'm proud saying it. And getting back to that, it's the toughest thing to do. People sit on your hands. A lot of the time, sometimes it goes well, but I think everyone here is smart enough to know that the model, no matter what it is with risk management, sometimes the longer you go, the longer you push your luck. And that's just like you said, that's the hardest thing you could do and sit on your hands, because it's actually a statement saying that it's hard to do, meaning it's a low percentage. You lose your edge that way. That's all I'm saying.
So I'm thinking, the most important part tomorrow is not raising rates unless it's 3/4. It's going to be their announcement of draining their balance sheet, the QT. And, when you look at a lot of markets here, Mike, they're very stretched. Doesn't mean that the rubber band can't stretch any further, but you have this huge move in yields. Maybe the hike is already baked in. You had this huge move in S&Ps in the last 2 weeks, right? And weekly doesn't look huge, but, that was pretty good velocity from the 4,500 level. And this last low, we diverged, held a real important line, Mike. When I look at this, you have to go to really a telescope, but the level is pretty important. And not just because it took out stops and 4,100, it's still above it now. And we took out this low, but look at this megaphone pattern here. So if we start to fail here, that opens it up. I really think if the Fed wants to break the market, and that's their goal, to create the negative wealth effect, to get people to stop buying everything, they have it on the ropes here.
I think it is. Listen, I don't think. Listen, you put it more intelligently, if you would. I think it's a 50-50, which it's not going to be a muted reaction, and I would think that the next day, please correct me if I'm wrong, you've seen more of these than me, that the next day or so it's really going, the earnings season is over basically in the next week. So outside of catalysts, it's like getting punished. You're punished for 2 weeks. Don't ask me anymore. You know
Yeah.
what I mean? And it's going to be that type of move, and we're going to have to adjust. But even technically predicated upon what you're looking at the chart. And I agree.
Yeah. And, we've also, here's another stretch out move, and we're getting a lot of people evening up. So we had a gold collapse in a matter of 3 weeks from
Bravo.
2070 to 1950.
Wow.
That's 220. So, I would expect some short covering here in the gold after this. Is this the major bottom? I don't think we're there yet.
Do you also think, like my statement about how how thin the line is, or however you want to put tomorrow, that will also determine the trend, like I said, with GLD going forward?
Yeah, I think it's going to be across the board reaction. We've had pretty much every market declining. We have stocks going down, right? We have bonds going down.
Right.
We have commodities going down. So, if the market has a risk on tone after, Paul doesn't shock us, everything will rally. What's going to be the key, and I know you pay attention to it because I hear you talk about it, is going to be the durability of that rally. Is it a 2-day, 2-week adjustment, or is it the beginning of something bigger?
Everything leading up to this, meaning everything, means earnings. I can't. I don't know if I could have put it together with the ESDS. I don't really trade futures. Obviously, they're a cage. Has been not how it is. It's how the market is taking it. It's surprising how many, if things are taken, if there's good news and it takes it poorly, that's the best price action of anything right there. How news is interpreted, and news has been good news. There's been some good news. I'm not an analyst, but I know some professionals, as you say, leave it to them. But there's been a lot of good, Apple being one of them, that has been interpreted in a bad way. And anything that's happening here, any other stocks, whether they be the secondary ones, have been taking advantage of being able to sell off on that news, piggybacking the best of breeds, if you will. And as you can see now, it's not doing well for a lot of them. A lot of these things can't hold any. No, it's been selling news. Yeah.
Okay, so I know sentiment wise, the market's pretty bearish.
No, it's
all right.
Well, listen, we'll do the
all right. Well, I
double
think
play
this
turnover.
Yeah, I think this is a good time to go to it. And really the bonds. So interest rates are going to be important for everything, right? Lower rates lead to risk on, and we get a pullback in the note. Everything should go, except maybe defensive stocks. I think I think the NASDAQ is set up to outperform the S&P.
I can't agree more. And that's not my opinion. I don't care and I'll show you.
All right, I'm going to stop sharing, and maybe we could touch on the semiconductors, which I've been talking about, and your pick in cannabis, because I watch a bunch of them. All right.
Yeah.
It's been the best of breed. See, what is CGC?
That's listen, like I said, I don't care if they make widgets. I have my whole screen set up.
Yeah.
Where it's, the best of breed is on top, and I rotate it maybe.
It's outperforming all of its peers.
Well, it should.
So, I mean, great pick, that's now my go-to stock if I think cannabis is going to rally, and it's acting okay.
No, it's actually, I listen, it's the only one I have. I have two of them on my screen just because I never put one stock in one sector as a gauge, because then there's no frame of reference. But it's one of the two I have on the screen. The other one I have is GRWG, which at one point was in the S&P with a lot of funds owned it. I don't know if they still do. I don't really trade it. It's a cheap stock. I'll chase it if I have to. I'm certainly not doing anything here. If I would do the CGC and did a little nibble. But
and you also told me about Lamb, and Lamb did not make a new low.
No,
last week when the market was making a new low. The semis look okay. So I asked Mike for his best of breed picks in semis and cannabis. What was it, a week ago, Mike?
Yeah.
And then so I started monitoring them, and have some.
That may be where you came up with. That was where we came up with the SMH thesis, because that was a big Texas Instruments, which, listen, we're old, but that used to be everything. If Texas Instrument was reporting the next day, I got to
Yeah,
bed early that night. That's something literal. That's how important it was. It moved the market. And
right.
the day that SMH tested the 230 and then pulled back to 228 and then finished above it was the day Texan reported. It was
Yeah,
down 20 and finished up positive. We'll get to the chart in a second.
yeah.
Can you share, Coach?
You could share now.
Oh, hold on. Oh, I can't. I got
It's at the bottom.
Yeah, hold on. Yeah, there you go. How you doing?
We were doing like a Huntley and Brinkley report just now.
It's not bad. Listen, whatever.
You remember watching that with your dad? Huntley
No,
and Brinkley?
my dad didn't like finance. Thank God.
That was news, that was kind of like
No, we
Walter
weren't.
Cronkite,
No, well, that I know.
guys like that.
Am I sharing correctly? Because we want to get
Yeah.
this. We want to
Well,
get.
we got your Twitter page and a chart up on the
No,
right-hand
we don't
side.
want that one. We don't want that. We want to go to what's important. And this is TradeView Markets and how you even get into TradeGATEHub. So here's the TradeView Market site looking better than ever. It really is, by the way. No? Looks
Yeah.
good. Okay, this is how we get into TradeGATEHub. This is the main room. By the way, if you don't want to be privy to any coaches' picks, by the way, quite honestly, has the hotter hand at the moment. Not that it's a contest.
Oh,
I'm following them. There's plenty of this. That's why there's a bid and ask and plenty of volume. Stocks indices room with things that I post specifically. If you don't want to, whatever it is, I post. I also comment in the main room. I'm just saying, you know what? It's one of the amenities that we have. You go to the live stream box. There's our YouTube channel.
right.
You want to watch Coach and I and what we did all week long? Seriously, this is it. Here's our videos. And the TradeView live stream team does a great job. Look at all the every guest coach has is 10, 20,000. Some have six figures. Helene Meisler, forget about it. So go back to the YouTube channel. It's that simple. You want to get educated? You go right here. So it's a red button. Boom. All right. So getting back to, yeah, it is. It's great.
Yeah, the design's great on this site.
No, seriously. If you go back to the videos, if I had this, I'd be on the cover of Forbes. If I had this when I was in my 20s by now. I declined anyway. All right. So basically, this is a Tuesday. Was yesterday's data. Monday morning, I put out the most data, which is always quality over quantity, quality over quantity. That is the TGH theme, because I know we throw a lot of data out and we are advanced, and we only try to put out data that at least, at the very least, consistently, which is my motto. And then we get to a flow. And like I said, it's so important. Athletes train for 8 hours a day, 5 days a week to play a 60-minute game. I say it all the time. Steph Curry shoots 96% from the line. He still shoots 200 free throws a day. It's not really about if he wants to get his percentage up. It's not really getting from 96.7 to 96.8. It's more about a routine. And at the very least, we provide the menu to be an active trader, a swing trader, a long-term position trader. Coach with having so much experience myself, I'm not short of opinions. We're definitely going to at least give you a good one, and you can go off it from there. So let me get back into here and what's driving the markets at the moment. Again, let me go into what we.
So you mentioned earlier a lot of chop, which is kind of what you would expect before a Fed meeting. People squaring their books a bit.
Well, but it is. Yeah, I mean, listen. If I'm down, hypothetically, if I'm down something 20%, God forbid, or if one of these things pops 18%. I'm not going to sell, right before a major. I would. So, people are repositioning. I'm talking about thinner stocks, if you will, which unfortunately I have too many of. Always a macro market view. Watch the Twitter videos. It's like 6 to 8 minutes long. And believe me, it gets you in a routine. It gets you fired up. And it's, by the CNBC guys. It's also, if you can't get excited about those videos, there's only probably one sector you can get more excited about. We won't go there. It's a family channel. But these are the videos that excited about. Active sentiment, pay attention. Fear and greed. You're right, Coach. It's very bearish right now. But there's two scenarios playing out right now. And I don't think besides the repositioning, I feel it's the way that nobody wants to step up. First of all, as I said before, I wanted the capitulation. And right now, there are still places to hide. And I'll go back to my major screen in a second. So I wanted, like when I got nervous the other day or flinched, I was like, the market rallied 600 points on that flinch. The market's a little bit right where it is basically the other day. And I'm not as nervous as I was the other day, nervous. So that's a bearish tone, for my opinion. When I'm positioned lightly, and let me get to the point I don't think it's a run up. There's not really a run up into the Fed. A lot of more stocks are breaking down, making year lows than making year highs. The other thing was I saying
Interesting.
indexes are irrelevant. Like I saying, the charts are irrelevant. So as the VIX being this level actually pulled back a little bit, it's been good for trading. But the whole theme we've had for the past couple of weeks, I'm looking over here because I'm looking at your face here, was and it's been prevalent. Just nobody's taking any big stabs. Amazon has still, so it did bounce a little bit. Amazon's in a major bear situation. And I'm getting questions here. So tomorrow, you have to have a plan more than ever. And I don't mean to be redundant. Have a list out because by the way, if it breaks that proverbial megaphone,
Yeah,
it's like the Mike Tyson thing. Everybody has a plan if you get punched in the face. And
yeah.
if it does the other way, everyone's going to be punched in the face. Maybe not, I'm liquid. But I'm telling you, you're not,
Oh, I think there's plenty of shorts to squeeze, don't you?
no, I'm positioned. Listen, let's go. You know what? Let's go. Keep going back to what I post here.
I mean, I'm sure there's plenty of people to liquidate out, but I feel like there's probably a lot of shorts in the market.
Excuse me a second. There are a lot of shorts in the market. And I'll tell you why. I want to go back to Monday's data. Tony Pistachio is trying to break down the door right now, so I'm going to let him in.
All right.
He must be telling me how to get some shorts because he's usually bullish. Hold on, but I got to get to the point. Hold on, Paul. Well, you know what? We didn't go. We're putting up so much data that we can't go back that far. So we're going to have to, on your own time, if you're going to have to press the red button and let and watch yesterday's video. Come on, play that. Buy dips. So you have to go back to yesterday's video, or maybe I can go in my stock room. I'm unbiased, as I always say, because I am mixed. So it doesn't really matter. And we're putting up too much data too. But in terms of positioning and, like I said, the majority of CTAs and funds, even going back to the Goldman indicator. And now I'm actually happy that I can actually talk more and not go back to charts because we put up so much data. You're actually going to have to go back to the YouTube videos because if you're not curious about what I'm talking about, you don't belong on here. You know what I mean? So the Goldman, as we said, the Goldman position indicator we follow, right, Coach Lewis and everybody? Yep. That's the most. They're the lightest positioning they've had in a year and a half. And by the way, this is a public feed. Sometimes on this Jesus feed that I talk about, it's public information. I'm not just saying, oh, it's a little bit. I got some positions in the Nasdaq, but that's okay. I got plenty of firepower. So, like I said, I wanted to go back and look at all the data yesterday, but we put in a lot of.
You use that Goldman positioning as a contrarian indicator?
Absolutely.
Okay.
Hold on a second. When the market's going like that or selling off and the hedge funds are short, do you agree, Coach?
That Goldman, I've never really, I've heard you talk about it.
Well, how about the CTA positionings? Do you believe they're under? I believe they're underweight, if not short.
Yeah, they are.
Okay, so I'm not saying it's going to work. I'm saying that's the info that I get to base upon a plan. And by the way, it's very high level info at 26 years and 40 years in the business. It's, I have a good frame of reference of what works and what's not. It's not an ego thing.
Yeah, so, a lot of people use commitment of traders reports, Mike.
No, I appreciate it. Touche.
Yeah, that's CFTC reporting for, the commercials, which are the users or suppliers of commodities. Then you have the large spec funds, and then you have the retail guy.
Right. No, Helene puts out the
small spec.
Right. Helene puts out a couple of those, but it's on Sunday.
Yeah.
So, when your question is Goldman, the Goldman is lightest their positioning. Goldman is arguably one of the bigger banks. So when they're sitting on a ton of cash, they're going to put money to work, right? So listen, I don't know if it's yet to be determined, and it's going to be a lot helpful or clearer tomorrow at 2 o'clock Eastern, that if they're going to go back into commodities or they're going to buy the dip on gold, like you said here, a dip of the pullback. It's more of a pullback. Or a dip, whatever you want to call it.
Or a pullback in the dollar.
Or these technologies. The bottom line is a lot of cash.
Yeah,
I'm in 50. I mean, I got 50% cash going. Goldman's lightly positioned. The VIX has come back down. And by the way, God forbid the VIX ever gets near 20. It's hedge funds it's almost a responsibility or a fiduciary responsibility when there's less volatility. You have to put money to work. People like, well, the markets are calm, and why can't you put money to work? So,
right.
There's
Well,
a lot of
people have been
cash.
making money selling their holdings at VIX 20 and shorting the market at VIX 30,
Right,
you know,
right. That's correct.
or buying the market there.
And I thought the VIX, I didn't listen. I was waiting for the VIX, and I'll show my chart. We'll get to some charts here. From experience, and by the way, it doesn't mean I'm right, and I'm not alone. I thought the VIX, let me correct the share, would be at least get to 30 before things calm down, but 40.
Yeah.
And I was waiting for the 40 because I thought were a little abnormal. When you're talking about the bond market not making a move since 1980, right? Correct. I posted this. What is the post I said this morning?
Yeah, this has been the biggest bond crash I've seen in a long time.
Enough said. But it is 1980, by the way. When you're
The
seeing Jim
velocity.
Cramer saying I have moves I've never seen, when I'm not the one, when I'm in ranges that I'm not useful, when the Nasdaq has had its worst month in April since 2008, you're talking about decade-long sample sizes. So when
Yeah,
I have
great point.
decade-long sample sizes on hard data, it's not my opinion. I thought the VIX. Hold on, let me go back to it. I thought the VIX would test at least 40. And you know what? I'm not mad I didn't catch the bottom. There's still plenty. What bottom did I miss? But I'm saying is, I thought, let's even go to a weekly. I thought things were so out of whack. I wanted the VIX. And by the way,
It may still go there if the Fed wants to kill things.
It's going to go higher if it goes over 40, and it should go higher with that. If you're talking about it, that megaphone chart.
Yeah,
that'll blow through that 40 whole number.
That's like an 8. We get to like 3,400. That's the next target if we break down all the way down there.
I would.
So,
I did.
Go ahead.
I didn't disseminate. I'm going to do that later.
Yeah.
I'm trying to do more positioning, as you can say. I'll come up with a plan again tomorrow morning. But yeah, I would say I wouldn't argue that those are the numbers I hear. Well, 3,600 is what I think I hear offhand. I'm give or take. Listen, I hope it gets to 3,400.
We might.
So
it's all in Powell's hands tomorrow. Isn't that something?
Well, that's what we're saying. And today, getting back to TGH, and by the way, this was the 2-week plan going in here in TGH. Before the 2 weeks going back into earnings, and there have been some precipitous declines, Amazon and Apple being some, to name a few. That's just in a specific sector. So if you're having those type of moves with earnings coming to something so sensitive that you and I think 98 have another 100 people would agree with us that things are so sensitive right now, almost binary. We've been using a binary word. That's scary when you're dealing with the market at this level.
Yeah. That's a lot of uncertainty.
I'm leaving it
because people can't. You can't identify a trend. The uptrend's been broken.
No, I can't.
Depending upon how you know, and the Fed is not easing.
No, I think it's a negative because there's always been a place to hide, and there's been safe money to rotate.
Yeah.
But once again, I haven't seen a red screen of mine in I don't know how long. That's not an omen. Knock on wood. But we'll do what you want to do with the statement. But
the 90% volume down. Dave.
Well, I've seen that, but I haven't seen my screen all red. There's been commodities, oil's been up. Tech, they squeeze it. Tech, they go into something. So I want, and listen. Do I want it to happen? I guess that's an egregious statement. No, I don't really. I don't want people to get hurt. Then that Helene Meisler's mom calls up. My mom asks me if I'm okay. Then it becomes more than when I went shut off the computer effect.
Yeah.
So
well, I think there's a shot for a face ripping rally that could rally the Nasdaq 20% back to 15.5, and I'm wrong under yesterday's low. So I mean that's a call. And the semiconductors, when they started turning the other day, the stop is 224. It takes it out. I'm gone, but it could trade 270.
I would say I would give it. I would listen. That's maybe my form. I mean, it's taking me freaking 20 years to break out of I want to expand my ranges. Unfortunately, I did a little bit with the downside and some small stocks. I'll get out of them, but I see at least 250. 250. Yeah. And I like the whole. Listen. It's a semiconductor index. It has a lot of options. I like whole numbers like that, Coach. So maybe the 250 here on the weekly is it's 10 day.
There's also fundamental news behind the semis.
Beautiful.
I saw
Western
right
Digital.
here.
I know Western Digital does disk drives. I get it, but that helps the sector in general.
Well, they're about the supply chain for, I believe, the element is neon that they get from Russia and Ukraine. that they need to make semis.
Right. And here's, well, and ON Semiconductor, Gerard knows it very well, had earnings last night. That could have been, this was on, this is, by the way, this was on, if you asked me for five good semiconductor stocks, this was,
Yeah.
it would have been 4 or 5. This reported yesterday, as you can see, if I'm sharing correctly, with you see at the volume, finished at the high, and another great sign. People didn't take profits right away. So, that's approaching the 50-day, which is important. So that's a good sign with semiconductors. Where's MU? All right, so MU's had a nice, I wouldn't show, I mean, it is in, it is in that triangle pattern, but that's MU. Texan, after I said that, reported that day. Look, this was the Texan day. It did that double bottom at 160. It reported. It closed at 171. Now it's looking nice again. God forbid it ever opens here. It's got 185 all over it. It does.
Okay. All right. Well, you and I are seeing some of the same things. Like I said in my video yesterday, I didn't add on from last week.
I did a little bit, but I'm not going.
But if they take them down initially and they're holding support, I'd consider that an add-on.
Well, let me just say something for anybody that wants to position before this. You got to make sure, predicated upon what Powell says. I mean, it's not only is it going to be binary, the rotational move will be binary.
Yes.
So you have to have a plan either way. The plan, not only be corny and cheesy with the plan. I'm saying I write things down. So with the NASDAQ or any of these levels right here,
define your risk is the most important part of your plan.
That is correct. I'm positioned for a little bit of a squeeze. I'm not going to lie. I'm not going to be. I am in every stock that I am in, considering the rotation acts appropriately tomorrow my way, that I would still be buy if it was down tomorrow. And that's the way I'm doing it now. Okay.
All right. So, the most important thing is know what your risk is before you put the trade on. Don't figure it out afterwards. So Mike and I have a few ideas, and, we're not betting the farm in front of the Fed, and use the Fed as an opportunity that if your narrative is still working after the Fed, for a time to build your position.
Use it as an example to get either keep trading, ask us, or get a demo account and trade it. I mean, if you have a vested interest, obviously it's not money, but if you get as far as getting a demo account, it'll get, you're in it. And I applaud that. Then this is the time for you to watch order flow. It's a time for you to watch fills. It's a time for you to have the correct positioning. It's a lot to learn about yourself more than anything. There's always going to be another trade. There'll be another Fed meeting, but you can learn a lot going forward. And tomorrow,
and then there'll be NFP Friday, and we'll see if that's a non-event too. So, following the Fed, and there's a pretty important inflation number before the Fed tomorrow. So anyway, it's going to be fun. What do you think,
Coach? It's only a matter of how fun it is, not if it's going to be fun.
Thank you, my trading warrior brother. All
right. Well, and guys, I'll take questions after lunch. Everybody, thanks for tuning in. As I said, go to the videos now. It's more, we're putting up so much data that I can't really reverberate to what I posted in the morning. And by the way, we're doing very well with some of the calls. So go back, and before you have to even go to a live video, go back and watch some of the videos. So instead of pushing in the pool, dip your toe in and get an idea of what our flow is. And then when you get onto live, you'll just catch up and be ready to roll. So that's what we're
and don't take anyone's advice blindly. It's got to agree with your own work.
No, absolutely. Absolutely. There's a been in there for a reason.
Anyway, great talking to you again, Mike.
You too,
every Tuesday. I want to wish you, I root for you. Good hunting tomorrow after the Fed, buddy.
Touche. We're on the same team, Coach. Thanks
for
sharing.
Man. All right. Adios, everyone.
Cheers.